Hello guys, welcome back to the channel. Today I'm Mush. We're gonna go right into the weekly and market portfolio update. Make sure you guys like and subscribe. Go check out my other content if you haven't already. Anyways, let's get right into the video.
Yeah, you better win your fight because I'm coming on your ass, boy. I'm coming for that ass. Pause.
Starting off strong, guys. Major U.S. liquidity benchmarks rose for the first time this week as buyers returned to technology and several other sectors following a two-day slide in Federal Reserve Chair Jerome Powell's first day of congressional testimony. And with that in mind, guys, the market indexes have been a little odd. The S&P 500 index SPX rose 26.11 points, about 0.5% to 5,104. The Dow Jones Industrial Average, or DJI, gained 75.86 points to 0.2% to $38,661, and the Nasdaq Composite Comp added 91.95 points, 0.6% to $16,031. So as you guys can see, the market's been a little bit up and down this past couple weeks. But regardless of that mind, we're still in new all-time highs and new charted territory. So be wary of where you're at and what you're investing in. And that's all I got to say for this. With that in mind, guys, Powell reiterated several recent statements in appearance before the House Financial Service Committee, saying the Fed believes in its benchmark policy is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year, he added. Wednesday also brought signs of slowdown in the job market. The ADP National Employment Report and the Labor Department's monthly jobs opening and labor turnover survey, JOLTS, both fell short of expectations. Investors now wait for Powell's second round of testimony Thursday and Friday's non-farm payrolls report. While both ADP and JOLTS missed forecasts, they still suggest a firm labor market, said Nathan Peterson, Director of Derivatives Analyst at the Schwab Center Financial Research. There isn't enough in this data right now to move the needle one way or the other in terms of interest rate expectations, with the probability of an initial Fed rate cut still pointing towards June, he explained, but the 10-year Treasury yield has dropped about 20 basis points over the past week, which is relatively constructive for stocks. In addition to this, semiconductor shares were among the market's strongest performers Wednesday, and utilities and consumer staples were also firm. Bank shares took pressure despite further declines in Treasury yields. In other markets, the U.S. dollar index DXY fell near a 5-week low, and gold futures extended a rally to a record above $2,160 per ounce, reflecting expectations for lower U.S. interest rates. Going back to it again, Powell maintains a cautious tone, while Powell in his testimony early Wednesday maintained the Fed's cautious messaging regarding the prospect for rate cuts this year. The Fed's historically aggressive rate hike campaign that started 2 years ago has helped tamp down inflation that peaked above 9% in spring 2022, but Powell and other Fed leaders have repeatedly emphasized they need to see more evidence that inflation is running sustainably around the central bank's 2% long-term target. The economic outlook is uncertain and ongoing progress toward our 2% inflation objective is not assured, Powell said. Reducing policy restraint too soon or too much could result in a reversal of progress we have seen in inflation and ultimately require even tighter policy to get inflation back to 2%. The job market remains a key factor in the Fed's decision, and a recent data indicated a slowdown in both job growth and wage increases. Payroll processor ADP said U.S. employers added 140,000 jobs in February, up from 111,000 in January, but about 10,000 below expectations. Job gains remain solid, and don't quote me on this, Nella Richardson, I believe that's how you say her name, ADP's chief economist, said in a statement, pay gains are trending lower but are still above inflation. In short, the labor market is dynamic but doesn't tip the scales in terms of a Fed rate cut decision this year. Also Wednesday, the Labor Department's JOLTS report showed 8.863 million job openings during February, down from 8.890 million in January, and lower than expectations for a number closer to 8.89 million. But Friday's non-farm payrolls report will likely carry greater weight in terms of interest rate expectations and potential market reaction. Non-farm payrolls grew an estimated 200,000 in February according to Trading Economics. That would be down from January's unexpectedly strong 353,000. During 2023, payrolls increased by an average of 200. Late Wednesday, traders pegged 95% odds. The Fed funds target will remain unchanged at 5.25% to 5.5% following the March 19th to March 20th FOMC meeting. According to the CME FedWatch tool, the tool shows a 76% chance the Fed funds rate will be unchanged after the FOMC's May meeting. Traders continue to lean toward June as the likely time frame for a potential Fed cut, with odds of a quarter-point reduction priced around 55%. And that'll be all for this week's weekly market update, guys. Just a little something different this week. I did a lot of research on this week's market update. As you can tell, I added a lot of who said this and who said that. So if you guys enjoyed that or like that, I will do more of that for sure. But we're going to hop right into my portfolio update. A lot of things has changed, guys. I know you guys are going to like it, so let's hop right into that. All right, guys, so a lot has happened in the past 2 weeks, I believe. I didn't post last week because I was busy and a lot of things were going on. But so far from last week, we've almost increased our balance by almost $1,000. We've added about $800. 800 around there, I would say. We're at $2,765 so far. We're profiting about $808 so far. And today we're profiting about $20. So yeah, we're doing really good today. We're going to start off with VU. I always start off with VU, so might as well. We're starting at 2.09 shares. So I did reach 2 shares this week, guys. I'm fucking feeling great about that. I feel fucking amazing. It's been awesome. I'm at an average cost of $452.50. So we're looking really good at that, guys. VOO has probably been my most profitable trade or fund that I currently hold so far. But beyond that, VOO is the way to go. Now with the Schwad US dividend liquidity, I'm currently sitting at 12.01 shares. So we're looking really good with this, guys, so far. I'm really anticipating getting to 20 shares and then, eventually 50 shares and then 100 shares eventually. Of course, this is all going to compound and add up over the years, but compared to my progress when I started about 3 months ago, it's been insane. So we're looking very good, and I'm currently at 76.62 cents for an average cost. Schwad does pay me the most dividends in my portfolio, but doesn't give me as much of a growth per se compared to VOO or VYM, which is absolutely fine with me. Not a lot of people look at Schwad and they kind of see it as this not tech like fun, but the way I see it is Schwad, it has potential for the long term and its growth is there for sure, and a lot of people are going to miss out on that. Now for the VYM, or the Vanguard High Yield Dividend Index, currently sitting at 6.579 shares at an average cost of $112.68. VYM is my second most paying dividend ETF I currently hold right now. I don't have much to say about this, guys. I mean, if you don't notice, most of my exchange traded funds have the really low expense ratios, and that's all for a reason too. Because I don't want if you're investing your money into a fund that has a high expense ratio, they're essentially taking more money out of your investment to put into their pockets. So that's the way I see it, and I prefer to invest in low expense ratio funds. And I will continue to do that. We're looking at our dividends, guys. We're at $67.51, and we're profiting about $5.63 per month, which is great. And I'm making 18 cents daily. So, making money in my sleep. It's not a lot, but who doesn't love making money in their fucking sleep? You know what I'm saying? Not a lot of people can say that, and I'm the one that can say that, and I'm 18 years old right now, so it feels good to say that. But Schwad currently pays me $31.46. VOO, $13.29, and then VYM, of course, $22.06. So these are all top contenders I'm currently going to be investing in. My top holding right now would be VOO still, just because I prefer, and it's a lot more growth orientated and more stable per se. But Schwad will for sure be my second core holding from this point forward. But yeah, that's all I got for this week's video, guys, or this weekly market and portfolio update. I don't really have a lot to go over this over my portfolio. Of course, it increased a lot. If you guys look at my first video, it's been an amazing journey, and I've been loving every second of it. And I love posting on this channel, and I love creating content for you guys. So if you guys have any ideas of what you want me to post or do, I think I'm gonna plan on posting some more ETF stories, because I think you guys really love those. But yeah, guys, I appreciate you guys for listening in. Make sure you guys like and subscribe, and I'll see you guys in the next video. Thank you.